Hello guys, welcome to Honey Pie Studio. Please kindly subscribe, hit the like button and drop your questions under the comment section. Okay, this video centers on scalping of indices and gold pair. Like indices such as the NASDAQ, NAS100, the US30, XPX500 and the likes. Okay, so but basically I'm going to be making examples on the gold spot, and it also work perfectly on gold and on the NAS 100 perfectly. Now, first thing first, you must need to know, you must need to have a prior understanding of chart patterns. That is chart patterns. You must need to have a pure understanding of chart patterns. I don't know. That is chart patterns. Okay. So this is where the understanding of chart patterns will work perfectly for you, and you use it to make good number of pips. At the most you make instantly 20 pips. If you are moving with the trend, you could make at most at 40 pips. But in order not to be greedy, 20 pips is very much okay for a scalper. 20 pip is too much for a scalper. Scalpers do take even 5, 10 pips and they are good to go. But 20 pip is good for you as a scalper. Okay, so now how are we going to start this? Now, first thing first most is identifying the trend. Now, mere looking at it, you starting from a 4 hours, you are good to go. If you start from 1 hour, you're also good to go. But 4 hours just to identify that okay, good and fine. The trend is what downward from high to low. We have the lower high. From the lower high, we have the lower low. From lower low, we have lower high, forming another what? Another lower low. So obviously, from this, we already have been able to identify that the trend is what? A down trend. Okay, now after identifying that fact, so you know fully well that the trend is a downtrend. Even if you want to take like 40 pips or 50 pips, you know that you are going to be trading with the trend. But if you are going to be trading a counter trend, there are possibilities of also having 40, 100 pips. Just zero your mind to taking as little as what 20 pips. Zero mind to do as little as 20 if you are going again, just like it's a downtrend now. You know that if you see any pattern that says you should buy, you know that just take 20 pips, the highest. There are possibilities of having 40, 50 or even 100 pips, but take what 20 pips and you are good to go. Except you are monitoring, you can be trailing your stop loss into profit and trading that's left to you. So now, having said that, we are going to be taking examples on how these chart patterns work on gold. Remember, it also works on the indices, which are what NASDAQ 100, US30, and the likes. But it works perfectly on gold, XAUUSD, and NAS 100 perfectly. So now we are going to be identifying some chart patterns. Okay, but before then, we are going to spot out some support and resistance on the 15 minutes time frame. So now we have been able to identify it's a downtrend. So we remove this, then we go down to the 15 minutes. Now, the 15 minutes is where we are going to spot out our little support and what resistance zone. So this support and resistance zone here is where we are going to be looking out to take profits. That's if the profit that could be maybe higher than 20 pips. But like I said, zero mind to 20 pips. These are points whereby if price get to it will change. Now, from this chart here now, we are going to be spotting out support and resistance. So here we have. Okay, and from here we'll be taking the support and resistance from the body, not from the wicks. Okay, the body, not from the wicks. Okay, so from here, from this particular point here, let's say we have this here, the body over here close. You can see it touched it here, touched it here. Okay, now we have another support over here. Reasons B is here. Price came here, broke out of it, came back to test and bounced off. So it's another support over here. Okay, now over here, price has also been reacting here. Over here, price reacted once here, reacted here. So it's giving us a good what support. If you see over currently here, price also reacted it here, the way it reacted back in the past. Now we also have another what point here, price reacted here, price reacted here. So on the body, now coming here, price reacted, price also did what, reacted here at this zone. So now we have been able to identify our current support and resistance. If we are looking at this place too, this is also a good point. This could also be a good point. But okay, let me just place it down there. Okay, this price can also react at these zones. Okay, now that being said, or that being done, okay, this place is also a good zone. You can see price has also been reacting at this point here. Just every point whereby price reacted is very, very important. Remember, we are scalping. Remember, we are scalping. Okay. So, like I said, the best point to enter is what, with the trend. At least if you are going with trend, you can get 40 pips. But remember, we are scalping. 20 pips is too much for a scalper, and it is perfect. Okay. So then, that being said, then we then move down to the 5 minutes to then spot out our what, our chart patterns. Chart patterns such as double top or double bottom, head and shoulders, falling wedge or rising wedge, flag pattern, pennants, as the case may be, as much as they be. So I'll be starting going back a little bit to pick some patterns. Okay, so pick some patterns, spot them out, and see what must have happened while these chart patterns are working. Remember, you won't win every trade. You won't win every trade, but your consistency will make you win more. And that is where the probability of winning more in the forex market comes to play. Now, me looking at this now, this is looking like what, a falling what? A falling wedge. So if you had been able to spot this pattern like this way, what are you going to be doing here? You are going to be waiting for what? Waiting for the breakout. So immediately price broke out from this zone, at least 5 minutes here, you are good to what? You are good to go. But looking at this support here is going to be a hindrance. So we come down to the 1 minute to be sure if we have a 1 minute close at that particular zone. Okay, 1 minute close at that particular zone. It works. You can pick your entry from 1 minute, you can pick your entry from 5 minutes. But me personally, I like picking my entry from 5 minutes. Okay, I like picking my entries from 5 minutes. Where are we? Where are we? Where is our pattern? Okay, let me go back to the 5 minutes. Can't see this thing. Okay, see it over here. Let me use my vertical line so that I can easily find it. Okay, so let me go down to 1 minute, back to 1 minute again, so that I can easily find it. Okay, here we go. Uh-huh. Okay, so coming down to the 5 minutes here now, we to the 1 minute, I mean, sorry, we can then check if the 1 minute candle did what? Close above that what? close above that resistance, and lo and behold, you see that the 1 minute candle did what? Closed above that what? Above that resistance, and even came back to test it to confirm it as a support. So this is at the point whereby you will then enter your trade. A close here is a good entry. If you want a little, you can wait for the retest and for it to come up again to be sure that it's ready to move, and you enter at this point. Your stop loss will be below this particular zone over here. Okay, but for this this is a very wide stop. So if you are using a higher stop loss, you can divide your what? You can divide your lot size so that you will have a good risk to reward ratio, and coming taking your profit at the next zone over here. You can see these 48 pips, but just like I told you, 20 pips is okay. But from this one here, zone to zone, if you are taking from the current zone to the next zone, you can see this is 40 what? 48 pips. That aside, that one gone. Now let's see if we can spot out another pattern again. Which other pattern that can give us good risk to reward? Just spot out pattern, double top, double bottom, price react very very much at those zones. Now like this point now is a double top, I mean. Now price reacted here, so price coming back to this particular zone, which is what a resistance. Price coming back to this particular zone, you can see that it's rejected at this point here. A bearish candle, double bearish candle is a good entry coming down, and we can pick to the next what? To the next zone over here. Maybe you enter from here to the next zone. We have what? Amazing 25, 26 pips, risking what? About 20 pips or 22 pips, depending on your lot size. You break it down. Okay, that is a double top. So if you are going to be able to wait, you wait and it see that it broke the neckline, you keep on riding it. But for a scalper, you do what? You take 20 pips and you are out. Okay, let's look for another opportunity here. Okay, another opportunity. Where do we have another opportunity here? Where do we have another opportunity here? Okay, you just keep on. In a day, you can spot out more than three patterns, especially this very simple rising wedge. This is looking like a rising wedge. You can see this very clean. Okay, you break out. Once it breaks out, like I always say, to the next what? To the next zone. This is 10 pips. Okay, if you can hold it, good and fine. If you can't, 10 pips is also good for a scalper. Okay, having this being risk. Also, this also is also a good to go. If you had seen this from this point, it looking like what? A falling wedge. Before you know it, price does what? Price breaks out. You do what? You wait and comes back here. What do we have? A good 20 pips at this point. Simple 20 what? 20 pips, you are good to go. Which other pattern again? Here, looking at this point, we have another pattern that formed here. Price did what? Price broke out of it. Very simple and clean. Price broke out of it, and we had the free fall from here. Okay, you can wait for a retest. If this place looks too close to this zone, a retest is good. Or even if you entered from here, good and fine. We're having 8 pips over here. You can set your TP to this point. 16 pips is good. 20 pips, you can see how it dropped. Why? Because this is the dropping according to the trend. Remember I said if it's the trend, you can take more than 20, but 20 pips is fine. But if it's against the trend, a little buy, you can take your 20 pips. You can see it's for this fact that is going with the trend. You can, it's what even saying that yes, this zone is possible to break. You take your 20 pips or to the next zone, 50 good fucking pips. While people are still waiting on the 4 hours, 10 hours for price to come back and do whatever you do, you have taken 20 pips multiple times. But best advice, one or two trade a day is fine. Like this was a good trade this morning. At the close of this 5 minutes candle here, boom, I took it to this next zone here. I took it to this next zone here, and that was how I covered that. And this one came back and retested, but I couldn't take it because I had no pattern there. You can also from here, we had another pattern over here, something like this. I just came out of this trade now. Okay, where did I take it from? Okay, obviously from here. This was what I saw, and it immediately broke out the close of this candle. Boom! I took my what? I took my 20 pips around here, around this zone was where I even took my 20 pips, and I'm off because of what? It's against the trend, even though from the higher time frames looking like price is retracing back to a point before it falls down. This is also a good trade. Okay, but I've picked my trade today. I'm waiting for another confirmation, maybe a close of this candle here, and I'll be down. Okay, so please kindly subscribe if you gained value, or drop your questions under the comment sections. I'll always be available to answer your question. This is strictly for scalping. It works for gold and for NAS.